Welcome, everybody. I'm here today with Chris and Alex from Jefferies, and really excited to have a great discussion about Bitcoin for corporations. Why don't we start with Chris? Alex, introduce yourselves, let them know who you are and what you do.
Sorry, me or Chris going first?
Doesn't matter.
Well, why don't I go first? Yeah. So, Phong, thank you for hosting us. It's an honor and a pleasure to be speaking at this conference and to have had the privilege of having MicroStrategy as a client. I'm Alex Yavorsky, managing director, head of the financial institutions banking group based in New York. Been with the firm for over a decade, and within the financial institutions group, I cover what we call the market structure and technology sector, which really is everything from exchanges to brokers to anything that touches capital markets, the infrastructure, the trading, the post-trade settlement, asset management, and the like. Chris?
I'm Chris Yonan. I head up the power, utility, and infrastructure group at Jefferies. And I'd say about 24 months ago, a lot of my clients in the power sector has been increasingly investing and becoming involved in the crypto and blockchain space. So I spent most of my time with respect to that on the mining and infrastructure kind of relating to that. I've been at Jefferies for a few years now. Before that, I was at Morgan Stanley. I've been doing banking and had a previous legal career for a little over 20 years now, Phong.
Oh, wow. Okay, great. Well, thank you for that. So tell us a little bit about how Jefferies is involved in cryptocurrency and Bitcoin and what product services you offer that may be related to that space.
Sure. We cover the cover the broader industry from investment banking. This includes the complete vertical chain of like blockchain, cryptocurrency. So we look at it from a technology and software standpoint, mining and infrastructure, and exchanges, financial products, and the like. Today with you, Phong, you've got kind of two legs of that stool with Alex and I. We've got a colleague, Tim Repke, who's in our technology group, who rounds out that effort. And as it relates to, obviously, we're in investment banking. We're very focused on mergers and acquisitions, both public and private capital raising. That would include equities, debt, leverage finance, private placements. And we're also, interestingly, working with crypto native companies to bring institutional investors into the space. Some of this includes creative structures like BTC margin loans, securitization of equipment financing loans, and other creative ideas, really with the goal, working closely with our fixed income side of the house to bring down the cost of capital and actually to create a lot more liquidity, I would say, out there for people that are investing in the space.
And how has that evolved in the last year?
From my standpoint, it's evolved quite dramatically, particularly as it relates to mining. We've seen, I would say, at first there has been.
We might have lost Chris there. Alex, you might want to.
Yeah, I'll pick up because I think our experience is very similar. In any case, we have a kind of a crypto central team that Chris, Tim, and I are a part of, and we coordinate on everything, even if some of it is more mining versus market infrastructure. So I would say really, as you could probably tell, we're a traditional finance firm, and we still cling to some of the accoutrement of that in terms of how we dress. But as most investment banks, you go back 16 months ago, we were sort of on the outside looking in, being curious about crypto, following it either personally or from a research standpoint. And then really our advent into the space has been, as I said before, working with you guys and learning from you in terms of some of the capital markets offerings that you guys did. And then, late 2020 and very much over the course of last year, we've done, we've gone from a standing start into being, I would like to think, a major participant, if not the largest, from a banking standpoint, having done, 3 deals with exchanges, SPAC transactions, M&A transactions for the likes of Bakkt, Bullish, Almax, a number of deals in the brokerage space, in the related kind of capital markets technology that supports kind of a blockchain native ability for trades to take place and settle. And then hopefully we get Chris to join us here momentarily or rejoin us, but also some capital markets offerings both primary as well as kind of in a secondary market, what's called ATM at the market offerings for some mining companies. So alongside that, again, this is M&A and capital raising, so traditional banking. Alongside that, we've been expanding our macro commentary or company specific research as it relates to crypto, both as an asset class and as specific companies. And we have a number of efforts, for example, in our fixed income business where we facilitate secondary liquidity, so some trading, lending, and actually perfect segue. Chris, I was just talking about some of our activities within fixed income that you've been working with our colleagues there on some crypto initiatives over the last year.
Yeah, I'm sorry about
some of the things we've done in banking.
Before we get into the mining side, Chris, welcome back, by the way.
Sorry about that.
So I agree, Alex. Jefferies has really been a pioneer as far as investment banks in the crypto space and supporting some very strategic work that different companies have done. Do you see traditional financial institutions? You sort of call yourself a traditional bank, but you're sort of on the forefront and maybe more agile. Do you see the other traditional banks starting to embrace crypto in the investment banking side of the world? Where do you see that going? Where has it gone in the last year? Where do you see it going in the next year?
Yeah, I mean, I'll start again from. I think it's sector specific, so it varies, and it's also obviously bank specific. Writ large, crypto or companies that play in the crypto ecosystem have without doubt become a highly bankable space, right? So where 6 months ago, certainly 12 months ago, in order to take on a crypto client, you had to go through all the same processes that you would with any client, committee process, AMC, KYC, AML. There was also significant sort of, I mean, I'll just be upfront with you, reputational kind of filter that, is this something that, looking back at it, a month later or reading a headline in the newspaper, we may or may not wish that we had done this. And I think, thank you for noticing we are, I think, as it relates to crypto and generally a much more nimble institution. And so we took that same question very, very seriously, but we came to a well-considered and early decision that yes, it is bankable, and you've got to, understand it for starters, because otherwise you're not coming to an informed answer. And it's company specific, but writ large, it's bankable. And I would say that, much of Wall Street has, I think, come to the same conclusion. We definitely see, I don't want to, I mean, to be fair, I'll point out that, yes, there are a number of other banks that are out there soliciting this business and trying to get it done. That's as it relates to banking. I mean, it's a little bit of a different answer as it relates to things like custody and brokerage and dealing, particularly on the retail side of things. But as it relates to banking, I think that Rubicon has been crossed, and I think very much to the benefit of the continued evolution and growth of the industry.
Yeah, you are the leaders. Seems like others are following you. What are the objections you heard along the way? What are the key things that you had to overcome as it relates to banking and the crypto industry?
Well, I think many of those start understandably from a lack of understanding of what crypto is, who is it used by, why is it needed, how, regulation is a whole separate topic of it, and perhaps many might argue that the whole concept of regulation is somewhat antithetical to the promise and the very nature of crypto. That's a separate discussion and a debate that rages on as we speak. But I think as it relates to Wall Street, we're highly regulated financial institutions, something that has a regulatory regime that is in flux or in some areas non-existent. I think creates a greater degree of opacity and potential risk. So it's for starters an educational exercise, really making sure people understand. You shouldn't do business that you don't understand. You shouldn't have for a client a company that you don't understand what they do, and especially if you're taking that company to the capital markets and raising capital. And so it starts with that, and I think we've very much built a degree of expertise that allows us to be as active as we have been. And then it's understanding what the risks are as it in particular relates to the evolving, regulatory and shall we say cybersecurity landscape underpinning the industry.
Got it. Thanks. So maybe we'll turn to the mining side for a little bit, because I know you have quite a bit of expertise there. Tell us about some recent trends in the Bitcoin mining industry.
Sure, Phong. It's been a pretty exciting time. I think if you look back a couple of years ago, there was 5 public companies that were pretty thinly traded. Now you can say there's actually over 20 companies, either public or going public, in the mining space. So we've seen, I think, a tremendous amount of growth. And the business models for these companies, I think, continues to evolve. I think you have a collection of pure miners who are looking simply at hash rate and getting as much hash rate as possible. You've got hosters who are looking to provide third-party infrastructure for people to plug in their machines. You've got hybrids that are looking to do both and potentially build for themselves, and even some that are acquiring power plants, renewable energy and the like, to actually vertically integrate the whole infrastructure along with mining. And it's not to say that one is better than the other, but what it does offer, I think, the investment community is a variety of ways to invest in the industry across a different risk spectrum, some having higher beta than the others. I think more in terms of the fundamentals of the industry, I mean, we all are very aware of some of the global events that have happened. The US is quickly becoming the epicenter of the industry, of the mining industry. And, I would say, it's state to state, but we're seeing a lot of support at the state level for miners to come in and really produce, it's the backbone, obviously, of the Bitcoin economy, to produce these Bitcoins and have mining there. And in addition to that, they're actually being very welcomed by even the power companies and utility companies in the space. We've even seen some of my more traditional power clients actually look to invest in the space directly. A lot of hash rate is expected to come online. I think we ended 2021 around, call it 200 terahash per second. Some are saying that could even double this year. And with that coming online, you need the infrastructure to support it. And all these miners are going to need a home and a place to really come home. And we do see some risk, I would say, in 2022 for the infrastructure. Maybe they're not there to be able to support all of it. So some differentiation between the miners. Infrastructure definitely could be a bottleneck today. But coupled with all those investments in miners, and this ties back to a couple of the themes, and what we think is exciting from a banking perspective is with all this investment in infrastructure and machines, there's a tremendous need to raise, I would say, billions and billions of capital to help support the space. And that's created a lot of opportunity for companies, a lot of opportunities for investors. And it's not as straightforward as a traditional power company, as a traditional debt company. The KPIs are different, understanding the fundamentals. And that's what's exciting and really, I think, creating a little bit of evolution of the capital markets to support a lot of these companies.
Yeah, not often do you get to see a brand new industry born right before your eyes over the course of the last year. But some of the things you pointed out, really the migration of capacity from the China to the US, partnerships between power companies and miners, the miners becoming public entities, states embracing miners. It's just amazing what's happened in the last year. So now let's talk about that sort of in the area of your expertise, which is what's going on with public-private capital being raised to support the mining industry.
Sure, and I was talking a little bit of that before my iPad shut down. Sorry about that. As I was saying, look, private market is healthy. I won't repeat what I said earlier. It's growing. We're seeing actually sector-specific crypto funds being formed to help support debt and equity investments, which to be honest, has been a great bridge, because not all of these companies are ready to access the public markets. And like any high growth market, you need capital providers that are willing to look earlier stage, see the vision, and that's kind of been more robust. With respect to the public markets, look, there's been a significant amount of education around it. We've been very, very fortunate enough to work with MicroStrategy around its capital raises, and to be honest, Phong, and that's really created, I think, a platform for people to help understand broadly Bitcoin and the industry. Since then, we've led IPOs for Argo. we did a very large convertible note offering for Marathon, where we saw significant oversubscription of demand. And this is all public, I would say, capital market investors and institutional investors. And that's what we really want to see from a capital standpoint to help support the industry, because it just gets it, I'd say, a lot more firmer footing for follow-on capital to help kind of support it kind of along the way. Research has increased substantially. That helps educate the market. And the point that you just said has been the most intriguing for me, is to see my traditional, I would say, power clients who really aren't tech savvy, aren't really high growth. Not only, it's one thing to say, okay, you want to provide power to these companies, and that's pretty obvious, but no, they're actually investing in the infrastructure, actually putting dollars and getting Bitcoin exposure through mining operations now. And I think you're going to see more and more public announcements along those lines of seeing traditional regulated utilities looking to actually invest and get exposure directly to Bitcoin, which is pretty exciting, I think, for all of us.
So if you're a large public market investor, institutional grade, and you're trying to get exposure to mining or Bitcoin, what are the key reasons they're doing it?
To be honest, I think in terms of when you say investor, you're talking about financial investor or more of a retail?
No, financial, an institution. Yeah.
Right. I would say it's twofold. And Alex touched on this a little bit earlier, where I think there's varying degrees of sophistication and education around, I would say, the Bitcoin community. I think there's a certain amount of financial institutions who see this as coming, they know it's coming, and they know they need to be smart about it. And it's hard to get smart about an industry if you don't have direct exposure, if you're not looking at the volatility upside and downside. So I'd say there's a certain group of people who are, I would say, dabbling in the industry to understand how it evolves and understand the risks ups and downs. And then I think there are real fundamental investors who truly like the beta and what we've experienced. And I know this is changing in 2022, but a pretty flat rate, low return type of economy, when people are looking for outsized growth returns, I mean, this is provided for it. I still think much more work needs to be done to get a little bit more fundamental supporting it. I think we saw with this last kind of financial downturn that the R squared correlation with equity markets was closest than it's ever been with Bitcoin price. And we really want to see the fundamentals, I think, stand behind the investment thesis around Bitcoin, separate and apart. I think there'll always be some correlation, risk off, risk on. That's how investors work. But I'd say that's kind of the bigger strategy we've seen from financial investors.
I'd add, if I may, one more thing, which is kind of more specifically within the financial services industry, right? So think of investors in, let's say, exchanges, right? I think there it's frankly it's both all the things that Chris said, but it's also based on some very sound fundamentals, which is it isn't per se a long or short view on crypto as such, right? Because it's really a view on whether the market itself is going to grow, whether it's going to become more predictable as it relates to some of the things we talked about, like regulation and frictional leg thereof across different jurisdictions, and more institutionalized. And to the extent that one takes a view, and we certainly take that view, that the answer to all of those questions is yes, to be an infrastructure provider in that market, especially if you buy into some of these, you talk about an industry being born in front of us. In addition to that, we're seeing entire market structure models being born, such as DeFi, or hybrid of centralized finance and decentralized finance, tokenization of a variety of assets going beyond crypto. And so if you believe that these trends have real real tailwinds, and they would have tailwinds if there was a fundamental reason why society or markets at large would benefit from them. And that's a longer conversation. But again, I think the answer to that is yes, and many people believe that, or increasing numbers of people spend a lot of real time on that and believe in that. Then you should want to invest into companies that are driving that innovation forward, without taking a view as to whether Bitcoin is going to 100 or 1,000 or 40,000 next.
Yeah, there's crypto as the asset class, and the disruption or the maybe differentiation that it creates. And then to your point, there's crypto and what it may do to the industry, the financial services industry as a whole. And maybe to your point, Chris, the best way to figure that out is just to go invest in some and to learn it, right, and understand it. So maybe talk about market structure a little bit more. And what is it about crypto that from a structure perspective, cause it to be different from other asset classes?
Yeah, well,
go ahead, please.
Yeah, so I mean, without keeping it too technical, I mean, maybe to highlight some of what I think are generally recognized concepts. One is, it's obviously a different settlement mechanism, right? Crypto sort of is an implementation of blockchain as an architecture for processing and verifying transactions. So that's a key difference, and that's a difference that I think had traditional markets, during the meme stock flare up been architected this way, then you wouldn't have had you wouldn't have had people shorting 150% of all the outstanding stock of certain companies, and you would not have had massive margin calls, which are a direct byproduct of an other than instantaneous settlement mechanism. The second is a more recent advent of what I mentioned before, which is decentralized finance, which is really the ability of asset owners to participate in what one might call the rent-seeking layer of financial markets, which is market making and intermediation. And I really think where that's going is a combination of market makers with a traditional central limit order book bids and asks that anyone can interact with, by people who are not bound to make markets but do so as a business model, with a more deterministic DeFi or automated market maker type of a model. And I think that certainly is very different about crypto, but I think that has the potential to make itself felt in other asset classes. And then lastly, what I alluded to before, for the tokenization of all the financial assets, and potentially over time, and I'm not talking about art and all the things, that's a sort of whole separate topic. I'm talking about real tangible assets, the tokenization of them. For that, there would have to be a significant upgrading of the contractual and legal framework, of the technology and data transparency framework. But I think all of those things, which nobody I don't think ever thought that you could trade certain things in dematerialized form. I think that's a concept that I think is native to the crypto space, and one that I think there's a good chance will become more standard in other broader finance. Well, and I guess the credit model is also very different, right? Where, for example, in let's say the futures market or the equities market, you've got a clear separation of exchanges, brokers, and clearing firms or FCMs. In the world of crypto today, although I don't think that that's necessarily the end state, all of those roles are often collapsed into one. Coinbase being a good example of that.
And Phong,
sorry, go ahead, Chris.
I was going to say, I was just going to distinguish between investability and leverageability, because I think the asset class is demonstrated as investable, and there's appetite. It's just really the form of that capital. So when I think about leverageability, i.e., using more of a debt kind of lower cost of capital type of product, I think, to be honest, that evolves just with any industry that's new. There's still uncertainty on the regulatory side. I think we're going to hopefully continue to get clarity on that. But and I see a difference between the two. It's more the form of capital, I think, that's going to be used to support the industry, versus whether or not it's investable, if that makes sense.
Yeah, it does. And so, Alex and Chris, you start moving into this direction of other products, investment vehicles, et cetera, that could come out of the cryptocurrency industry or space. What are Jefferies' plans? What are some of the products you plan on launching? What are the areas you're excited about in the next year?
Yeah, I'd split it into two. One is continuing our efforts around investment banking and enabling companies such as yourself and others, and hopefully getting new clients to allow them to raise capital and deploy it in ways that facilitate their growth. And that's there's a lot of opportunity there. So that's I would say our most immediate focus. Now, we are a full service investment bank, which means or financial firm, which means we also have trading businesses, fixed income and equities, and we have a number of plans there around, these are relatively early stage, but becoming a more fulsome participant in crypto in a manner that we are in the more traditional asset classes, as potentially as an intermediary, in various different ways. So again, it's quite early times there, but I think that would be, besides investment banking, kind of the natural place for us to look next to. Not making any announcements on this call, but that's just kind of logically where I think we're looking.
Well, that would
I
be
would say,
exciting.
Phong, I think we're going to continue to look to try to be creative. I mean, we've looked at across our different industry expertise, different ways to raise capital, and we've all seen it, whether you're in tech, energy, or covering financial institution companies, and really it's continuing to evolve. I think the financing technology, whether it be equity or debt, to help again support. We talked about the capital intensiveness. We even talked about the tech and the R&D side, and so I think we're going to continue to play an active role, not only educating, I think our Salesforce and teams, but use them as a way to help educate the market more broadly, to think through creative ways to help finance companies.
Great. Well, that would be exciting to see you move beyond sort of investment banking services into other areas as it relates to the cryptocurrency space. So exciting times ahead for us. Any closing remarks that you'd like to share before we head off?
I'd close with, I guess, where we started, which is it's well, to one of your early questions. 2 years ago, I would have never thought we'd be a part of a conference like this. It's an incredibly dynamic space. We've tried to move as fast as the space itself, which is no small feat. Massively appreciate the opportunity that we've been given by you guys, and then everything else is as we've talked about in terms of what's transpired. And I'd like to think that a year from now, when we're hopefully having this conversation again, it'll be a logarithmic function of additional change that has transpired since. So it's an exciting space, and to all who are listening to us, congratulations on being a part of it, and wish everyone much success.
And Phong, I just say thank you to you and Michael for including us, and the disruption we're seeing between blockchain technology, energy, and infrastructure is truly fascinating. We're excited to be a part of it. So thank you so much for including us.
Well, thanks, gentlemen, for making the time today. We appreciate your time, Jefferies' time, and the partnership.
Thank you.
Absolutely. Thank you, Phong.
Take care.